Cool. You were also having a look at Nintendo this week. They reported earnings. They're a much more familiar company, I guess, to quite a few of our viewers and listeners. They're certainly more familiar to me, anyway.
Yeah, so well, again, it's one that we spoke of before. I've been in and out of this stock. It's a strange one for me. I kind of buy it and then I find something better, but I'm actually sort of committed to holding it for a little while now because I mean it's super cheap. Its earnings were not that great, but that's to be expected because it's quite late in its current hardware cycle. The Switch itself is about 6 or 7 years old now when you're competing against the PS5 and the Xbox, which are 2 or 3 years old now. It's always going to be difficult to pedal your equipment, especially when it's lower spec. But I think this is a really, really good company. So I've tried my best, Steve, to get everything back to a currency we understand.
Okay, it's Japan, isn't it?
Yeah, because some of their things are like 18 trillion yen, and I just know nobody has the brain power to get that converted back. It took me ages to figure it out. So here we go. So the market cap on Nintendo at the moment is $49 billion. It has a 19 current PE and a 17 forward PE. If you factor in their cash, which you should do, they've got 13 billion of it. It's not insignificant. It drops to 15 and 14. So gross margins fell from 55.6% to 53.9%, which is good for an industrial. That's pretty strong. This was attributed by selling more of their newer OLED model, which is not as heavy on the gross margin. This was actually offset, though, by a lower proportion of hardware to software sales overall, which is a good little thing to have coming along. If you take their current 3 quarters and you compare them against the last 3, digital sales have actually grown 21.5%, and they've gone from 40.2% of revenue to 46% of revenue. If we're just doing Q on Q, they're still up 10.2%. This late in the cycle, that's quite impressive. Annual paying users pushed higher again. This is a trend that's been consistent over the whole of the last 5 years. It's actually grown now to 14% to 112 million. There's some bright spots in digital sales too. So the new Pokemon game sold 18.2 million units in the first 7 weeks after release. That's the fastest start of any title in a Nintendo franchise. There's Zelda around the corner soon too, so this record could be fairly short-lived. Bad news. Nintendo slashed its profit guidance for the year from $3 billion to $2.8 billion, and they've blamed this generally on just weakened console sales. They sold 8.23 million consoles during the Xmas period, which was down 22% year on year. And this looks especially bad when you compare it to Sony, which recently raised sales guidance on their PS5s by an extra 1 million. But it's actually no worse than the Xbox performed. So a new Switch is pretty close now. The analysts were trying to get some information out of Nintendo, but they didn't give any information. But if the Switch comes out and Nintendo get it right, this is another one of those stock, Steves, that will look really cheap.
It kind of looks cheap at the moment anyway, to be honest. It never looks terribly expensive when I look at it. You said 19 and 17, or if you try and factor in the cash, 15 and 14 for PE ratios. I think debt's under control as well at this company, and I've looked at this and thought it's pretty cheap, and I'm not a massive believer. I think a lot of brands are overrated, basically. I think it's about Stellantis. I think it has a whole lot of kind of brands, and I think a whole lot of brands probably doesn't really amount to anything very much. But when I think about stuff like Pokemon, I think that's about as strong as it comes, and that seems to be borne out by their kind of most recent stuff. And I think to myself, well, look, how complicated do you need to make this? Find something that people will pretty much buy more or less whatever you do. This comes into the find a business an idiot could run thing, which is just make some sort of Pokemon thing and don't do anything stupid and completely ruin it. And people will buy it. And I look at that, and I look at also stuff like Madden and the EA Sports and FIFA and that kind of thing, and think those will pretty much sell themselves every year. You don't have to worry too much about content creation. You can keep moving that forward. Went right off Pokemon personally when they started getting past about 250 or so. But
yeah, there's millions, though, aren't they?
Probably, but there's also plenty of people that want to keep up with this stuff and follow it along and so on. So I think this is I like this on the software side quite a lot. I was interested in their kind of hardware mix. You mentioned the hardware, the mix of hardware to software was kind of unfavourable, and that pushes down margins because you have to manufacture the hardware stuff. The software stuff kind of is develop it once and then operational leverage from there. I like it, although I guess I probably would prefer a pure play games thing that had some strongish brands there. I'm not quite sure what I think, and I also feel like, I suppose I come back to where you are. I would buy this, and every part of me says, say why you're not buying this, and the honest answer is I don't really know, other than I think I would get fed up with it and sell it at the wrong time as well.
Yeah, there is always a chance that you'll find something better out there. Key to note that it's paying a 3.77% dividend at the moment for the dividend chasers out there.
You beat me to it. I was going to say we are a proper investing show. As such, we must talk about the dividend.
Yeah, so there you go. Maybe comparing it against something like Take-Two at the moment, Steve, which had some pretty dodgy earnings. Actually went up on its dodgy earnings as well, up about 10%. I think it missed on absolutely everything consensus tracked it against. But it still went up 10 or 11% afterwards. But that's a software company with some pretty excellent games in its library and coming soon to its library. So maybe one of those things that Motley Fool recommends to stick in a basket and maybe buy a few of them.
Yeah, it's a strange one. I don't own Nintendo shares. I've never owned Nintendo shares. I think it unlikely I ever will own Nintendo shares, and I can't really argue with anyone who does. I don't have a decent kind of case against this particularly. I hear Activision Blizzard, by the way, the UK is attempting to get in the way of their deal with Microsoft. Calling it anti-competitive will mean higher prices for gamers who don't want to buy an expensive console. I sort of thought buying expensive consoles and setups was part of the business of gaming, personally, but, I'm not a UK regulator.
It does seem that it's not just the UK that's going to break that deal down. I think everybody's sniffing around at breaking that one down, which is kind of another reason why I think Microsoft's gone on the attack to Google. I think they're trying to hide the fact that, they had some pretty average-looking results, and now this Activision deal looks like it's going to break down, or at least there's going to be some pretty hefty sanctions put in place to, potentially sell off bits or all of the interesting titles from Activision Blizzard. And I think Microsoft are trying to sort of smoke and mirrors that a little.